Hi there! Is passive investing truly passive? Is the question I will answer in today's quick video. But before we dive in, just a quick reminder that our videos are for educational and entertainment purposes only and do not constitute tax, legal, or investment advice. So let's begin. Is passive investing truly passive? Well, there is a pretty big passive element in passive investing because ultimately you're not managing the day-to-day operations. I would argue that it is not a scenario where you're lying on the beach drinking pina coladas all of the time, unlike some social media posts like to display. First of all, you need to be extremely well educated on the investments that you make. Why? Because you have fiduciary responsibility towards yourself, your loved ones. You want to make informed investment decisions and not blindly follow the crowd or social media personalities. So take the time to educate yourself on the market, on the asset class, the sub-market, so that you can better vet the investment opportunities presented to you and make your own investment decision. And speaking of vetting, that's item number 2 that will require more of your time, at least on the front end of the investment, and that's the due diligence part. You want to do proper due diligence on the sponsor, market, sub-market, the investment, the offering documents, the structure. I cover a lot of that in my newsletter as well as in this channel, so you're welcome to browse through my blog or my video posts and dive into that topic. But you have to take the time to do proper diligence on the investment because, again, at the end of the day, you're putting your hard-earned money at risk, right? If all investments carry risk, so you need to understand the risk factors, how or if they're mitigated, if or not they align with your risk tolerance, understand the investment thesis and whether or not it aligns with your own goals and objectives, and then make an investment decision. Number 3 is monitor your investment. I know it sounds very appealing to just send your money and wait for distributions to come in and check your bank account once a month or once a quarter. And that's all good as long as things are going great. But I hate to tell you, things don't always go great in investments. There are always surprises, or there may be periods of challenging or tough times that the team will be working through. And ideally, they will be communicating those events ahead of time with you and not necessarily surprising you. But by monitoring your investments diligently and regularly, you will be able to spot trends maybe early on and have a conversation with the sponsor regarding those. Also, by monitoring your investments, you'll get more and more experience reading and really seeing through the most important details in the various investment reports that you receive. So all of that makes you a better investor and a savvy investor in the long run. And number 4 is proper planning, especially at the time of exit or contemplated exit of the investment. And hopefully it's a profitable one where you are looking at a situation where you have a gain on the sale of the property. So coordinating ahead of time with your tax advisor and CPA is extremely important, so you can hopefully minimize some of the tax consequences by layering or carefully planning ahead your next investment. So I hope you found today's video on is passive investing truly passive helpful, and if you did, please like, share, and subscribe, and I'll see you at the next one.